Welcome back to a new video. Today we're going to take a look at the Euro USD from an order flow fundamental as well as a sentiment and technical perspective. And as always, if you are new to the channel, a sub would be appreciated as I do provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now we're going to kick off with the technical data. So if you do remember, on Sunday I made a breakdown and I explained all of the reasons why we could see this move on the Euro USD to the upside there as well. Now starting on the monthly time frame, firstly we can see how the market is currently testing this very strong level of support. Now this level over here acted as a level of resistance. The market broke above that level and is now testing it as a level of support for the first time. The market also printed this overextended information. After an overextended information, you normally expect a pullback to the left leg before the continuation to the downside. And we can see how the previous red candle for last month had not gone and tested that previous level of the left leg, so definitely some upward continuation expected. Now looking at the weekly time frame, what do we see? Now from a weekly perspective, we can see how the market is currently testing this strong level of resistance. Now this level over here acted as resistance once, the market broke above that, came to test it as support multiple times. The market then just melted to the downside and all of that support is now once again turned resistance, and we can see how the market is testing that level there as well. Now if we go down on the daily time frame, what do we have? Now from a daily perspective, we can clearly see how the market first of all had been moving quite aggressive this week, and we can also see how the market is rejecting this level here as well. Now the best thing that we would like to see in this market is for this candle to close with a long wick, because normally if you get a candle with a body to ratio of 50%, you can always expect the next candle to go and fill in that wick. What we can see over here is we can see how the market is currently testing this level of support and it's now testing it as a level of resistance. Now here we've got this massive impulse. After an impulse, you normally expect a correction, and the way you measure the correction is by taking your Fibonacci there from the high to the low. And what we do need to keep in mind over here is we've got the 0.382 where we could potentially expect the market to pull back to before the continuation. However, if we do look left, if we look left, we can see here that we do have this strong area in the market that acted as support there as well. Now the market broke above that. Now all of that support is once again turned resistance. Now all depending on where this daily candle closes, if this level of resistance over here does not hold, then we can definitely expect a pullback before the continuation there as well. However, if we do get a candle with this nice wick here as well, then we can definitely expect some more continuation to the upside tomorrow from the Euro USD. So two ways that we're going to approach the situation. Sorry about that. Two ways we're going to approach the situation. If this market does close with a red candle, we can definitely expect a continuation to the downside. Alternatively, if we do get a candle with a long wick, then the best way to approach the situation would just to wait for a break above this level of resistance. Then as soon as that level is turned support, then the best way to do is to drop down on the lower time frame and start looking for some good opportunities in there. Now the next thing we are going to look at is we're going to look at some fundamental data. Firstly, for the euro. Now we can see over here this headline from Eurusd that says that German inflation eases in January, but not enough for the relief. Now one thing that we do need to keep in mind is we did have the CPI data that came out for the euro as well. Now for those of you that don't know what the CPI data is, it's basically the consumer price index, which measures monthly changes in prices for a range of consumer products. Also keep in mind that changes in the CPI record the rate of inflation. The CPI can also be used as a cost of living also. Now the CPI data for the euro was quite positive, or the data was less than expected, and as a result of that we saw euro pairs across the board had moved quite aggressively, because when I spoke about the euro on Sunday, the market was sitting at this level somewhere here, and I explained all of the reasons why we were looking to buy the market to that level. Now because of the fundamental data that we receive, the market then broke right above that level, and as any market, after the impulse we need to Yeah, we always expect a correction. Now we had the ADP data that got released today for the US dollar. And if you're not familiar what the ADP is, the ADP National Employment Report, well, it's basically just a report with a monthly snapshot of US non-farm private sector employment based on the actual transaction payroll data. It is also popularly known as the ADP jobs report. Now, firstly, we can see over here that it says here companies unexpectedly cut 301,000 jobs in January as Omicron slams the labor market. Now, it's quite funny though, because when Powell came out last month, he said that everything is fine, jobs are up, and they're making good progress within the job sector. However, now that the ADP data got released, that's clearly not the case, and this kind of gives us an indication of what we can also expect from the NFP coming up on Friday as well. It reads here in terms of the key points: private payrolls fell by 301,000 for January versus the estimate for 200,000 gain, according to the payroll processing firm ADP. So they were expecting to increase the amount of people that got employed, but instead of getting the 200,000 people that they thought they had employed, they actually lost 301,000 people there as well. Now, it also reads that this was the first reported net job loss since December 2020 and came as surging Omicron cases hit as well. Now, if you guys do remember, we also had the coronavirus in 2020, and we can slowly see how the Omicron is starting to crawl into the US market once again. And regardless of what Powell had said, it also said here the pandemic sensitive leisure and hospitality industry was the hardest hit, losing 154,000 jobs. God be with you. Now, it's very important to understand that we obviously know that the hospitality industry is directly impacted by anything that would hit the economy in terms of travel ban and people not being able to come or to even go out to go book into a hotel. So people don't go out that much out anymore. So as a result of that, the data came through negative. Now, one thing that we need to keep in mind is that technical data drives the short-term momentum of the market, and fundamentals drives the long-term momentum of the market. And we can definitely expect the Euro USD to increase in strength over time because of the positive CPI data and the negative ADP data that we received for the US dollar against the euro. Now, if you look at the sentiment data, so this tells us what retail traders are doing in the market. And if you look over here, we can see over here that 72% of retail traders are short and 28% of retail traders are long. And like I always say, you always want to be on the opposite side of what retail traders are doing. So 72%, if 72% of them are selling, you can clearly see here what happened to them, because the market had no indication of wanting to go up. But one thing that's quite interesting is if you look at the commitment of traders. So let me just bring up the report. So this was the last report. So this is the commitment of traders. So this tells us what the big banks, hedge funds, and institutions are doing in the market. And we can see here, based off last week's report, hedge funds came in and they actually added 1,507 long or buy positions. We can also see how they came in and they closed minus 5,469 short positions. Now, if you can see exactly what it is that I'm speaking about. So hedge funds, they came in last week and they started buying the euro. Retail traders, they are in and they are selling the euro against the USD. Then also, just remember one thing. So we're only going to look at the data for the euro, because all currencies trading on the spot, they trade against the US dollar. So when you look at data for the euro, you're actually looking at data for the euro USD. So basically, what that means is that we can expect most currency pairs across the board that are trading against the dollar to slightly increase in value, not because they are getting stronger, but the dollar is getting weaker. We also noticed that the dollar, in terms of the DXY, fell back below into the consolidation phase, telling us that there's some downward momentum expected back to support, and hopefully the market can rally back up to hit that level of resistance. Now, it's important that you are reactive and not predictive, because as traders we need to learn to adapt to the ever-changing market environment. Now, the two ways that we are going to approach the situation is: number one, if this candle does close above the structure, then by all means we can definitely expect the market to pull up higher, go and create an equal high, come back to the retest, and then start the continuation. Alternatively, if we get a massive rejection between me talking here now and the day ends, we can definitely expect the market to pull back, go and hit the 0.382, between 0.382 and the 0.50, before the market starts its next continuation to the upside, which I don't think is going to happen. And the last option would be for us to just wait for this candle to close. And if this candle close with a body 50% to the wick, so 50-50, 50-50, then you can definitely expect the next candle to go and fill in that wick. Now, if you enjoyed the video, then I want to say smash the like button for the YouTube algorithm, and you can share the video with as many people as you want to, just to make sure that we spread the word out there. I want to say thank you so much for taking the time out of your day to watch the video, and as always, cheers for ears.